314.9% return from 2020 to 2024 on the S&P 500 micro ES futures. The first thing we're going to do is head over to Tradevate, look for our overnight margin, and we can see that it's 1298. We're going to get into our strategy tester. We're going to make sure that we're just using our uptrend and downtrend signals, buy signal AI, sell signal AI, and sentiment AI, buy and sell, which are going to give us everything that we see on the chart here. We're going to be trading the happy trader signals, which are the uptrend and downtrend signals. This is not super trend. Be careful. Do not get chopped up in these potential trend reversals. That's not what we're back testing. We're not back testing these super trend looking signals. We're back testing our uptrend and downtrend signals, which are fully proprietary to Happy Trader. We have a lot of great back testing videos, and we are here to help you learn to trade. That is the purpose of this channel. The first thing we're going to do now that we have our indicator up is turn on our back tester. And we're going to immediately see that we have an overlay buy AI, and then we have our sell AI. We're buying on the uptrend signal and selling on the downtrend signal. Simple as that. The next thing we're going to do is double check our margin requirement. 1298, we're going to round that off to a 1300. We're going to set this to 1300. We're going to be doing one contract. We're not going to do any pyramiding because we're using a 45-minute time interval. Even though we're going from 2020 to 2024, we're still going to leave this at one contract and not put pyramiding, not calculate commissions, because you're going to see that the number of trades is not going to be that crazy since 2020 on a 45-minute time interval. For those of you who like to just put on trades, not very often, get your alert through Happy Trader on your phone and be able to take the trades at your leisure without having to sit there and stare at a screen all day, because who wants to do that? You can just get a little buzz in your pocket, get your alert, and you're good to go. That's what we're going to be back testing. We're going to be just doing the one single contract here. We have deep back testing enabled. That's going to enable our timed back test. We have our dates from May 1st, 2020 to May 21st, 2024. We're going to go ahead and generate our report and see how we do. Looks pretty interesting. Let's get the bad stuff out of the way. It's the elephant in the room, and it's a big drawdown. You don't know where you're entering the market. This is at a random point, and you can see every time we go red, we're going underwater. The best thing that you can do if you're using a strategy that backtests that has a positive expectancy, like you're seeing over here, is delta hedge. Now, you can subscribe to the channel, and you'll see a lot more coming out on delta hedging soon. But basically, you're going to go delta neutrals, your core position's long, and then you're going to have a secondary position, which is your hedge. I'm going to be showing you that in a future video. You can see we got off to a little bit of a rocky start there. Then we got all the way up to about 2,000 and then way back down to 1,200, all the way back to 973, 946. Definitely would have had a small margin call, nothing crazy, because on our long only strategy, we are looking to get long on the market and not go more than one contract either way. Day in, day out, you're going to see the list of trades. It gets brutal, right? You have strings of losers that can last a while from 326 all the way to 412 before you start getting really outsized winners. That's really the bad news, is the drawdown. If we were to reduce this drawdown through changing the strategy, we'd also have to increase risk in a number of other ways, and the expectancy is therefore going to be decreased. It is something we're looking into, but for now, we are happy just delta hedging and just letting this thing roll on the long only, because you're going to get a magnified exposure to the SPY and the SPX, just the S&P 500 or the Vanguard Total Index. And that's really how that works. Now that we kind of have the first biggest bad thing out of the way, what's the next thing? Well, this is something that you could consider bad, but we consider it good because it falls right perfectly in line with not only a healthy market, but also within our conventions of how we designed happytrader.io. We have about 1 out of 3 trades that are winners. You're probably thinking, well, if you only win 1 out of 3 trades, how does that shake out? Well, you can see over here, the average trade is $14, 0.07% on this small account. What's unique about Happy Trader is that you can have a very low win rate and a high drawdown, but if you have your hedge in place, your core position is going to be able to create a major outsized return. And you can see that with this multi-year back test, 314.9%. We're going to start getting into the good stuff. We don't have a lot of closed trades, so we don't have a lot of commissions. We're not getting super chopped up. Average trade expectancy is positive there at the $14 on one micro ES contract, which is unbelievable. And we were able to 3x our cash from 2020, 314% with minimum downside risk, especially if we're hedged. The time in the market really does matter. And if you're getting a magnified and leverage, I mean, this does hurt to go from here to here for sure over that long of a period of time. But if you're not worrying so much about it because you're not over position size, you're going to be able to grow your money at a far faster rate, even if you're only using a small percentage of your capital. The other interesting thing is when we go into the list of trades, of course, I want to point a couple things out. When we go into the trades, you can see that we have these really crazy streaks of losers because we're only winning about 1 out of 3. But you can see our winners are outsizing those losers. So small losers there, bigger winner. Those are some decent sized losers. But you can see that if you're a scalper, you have the chance to win even on the losers. The same goes for the run ups on the profit trades. There's run ups everywhere. Wonderful if you're sitting there in front of the screen, if you're a day trader, even if you're an active swing trader that likes to watch the markets all day. This is going to be something that's going to work out great. As we kind of get along here, you can see the accounts start to grow, but you can see our winners start to dramatically outsize the losers. And that's really the essence of our proprietary strategy with Happy Trader is we're going to give you those really, really big winners. You're going to lose a lot of trades and you're going to take a big drawdown. But like they say, there's no free lunch on Wall Street. Something has to give. And in this case, if you want the returns and you want them in a relatively safe manner, this back test was performed without a hedge. So you could get even safer, but you'd put a little bit of drag on this 300% by using your delta hedge. Ultimately, you would prevent catastrophic account blowups by a perma bear market that goes way down or a crash. So you can either delta hedge or you can just let this thing ride and you can just fulfill your margin calls. If you're using one micro contract, fulfilling the margin calls for most folks is really not going to be that big of an issue. You can go long MES with the core position, then go short the MNQ or a correlated asset for crash protection because when in a crash, we're going to see all three indexes drop. We're not going to have the NASDAQ at all-time highs and then the S&P crash to zero because there's intercorrelation and arbitrage involved there as well. That's something I really want to point out. Overall, really stoked about the results of this back test. Yes, it was rocky. Yes, we had a lot of drawdowns. But if you stuck with this trade, like anybody out there who buys and holds in their portfolio and just doesn't look at it, doesn't think about it, this is going to be a phenomenal return and an outsized return compared to most hedge funds out there. And we are really, really proud that we are able to bring this directly to you through happytrader.io. That's going to do it for today's backtest. Again, my name is Ryan, CEO and head quant here at Happy Trader. Feel free to subscribe. We have a 314.9% return from 2020 to 2024 on the S&P 500 micro ES futures. Have a great day and happy trading.